Well, there's been a lot of talk lately about silver maybe heading to levels that still sound ridiculous to people because the charts look explosive, the macro picture looks ugly, and the whole financial system feels like it's wobbling on loose screws. So in this video, we're going to separate the flashy part of the story from the part that actually matters. And you're going to walk away feeling much clearer about why people keep throwing around these huge silver targets. By the way, it's Tuesday, April 14th in New York, so drop a comment and tell me what day and date you're watching from. And real quick, if you value this kind of breakdown, support the channel by subscribing and comment John A.G. Best so I know you're with me. Now, the first thing getting everybody fired up is obvious. You've got people saying $300 silver is possible. You've got other people saying 500 isn't crazy. Then somebody always comes along and says, forget that, this thing could go to 1,000. And on the surface, I get why that grabs attention, because silver is one of those markets that can go from boring to unhinged in a hurry. But here's the key. Big price targets by themselves don't mean much. Anybody can draw a line on a chart, stretch it into the future, and make your eyes pop out of your head. The real question is whether there's enough fuel underneath the move to make one of those giant targets more than just internet wallpaper. That's where the story gets interesting today. So let's start with the chart case, because that's what pulls people in first. There are a couple of long-range silver charts making the rounds that basically argue the same broad idea from different angles. One of them says silver today is behaving a lot like it did before that monster run in the earlier part of this century. Not the exact same, not perfectly, but rhythm-wise, structurally, emotionally, it rhymes. Long quiet period, breakout behavior, hesitation, and then the possibility of a much steeper leg higher. The second chart is even more dramatic because it uses a much longer historical frame and tries to show that once silver clears certain old ceilings on a yearly closing basis, the next stage can be way more powerful than most traders are emotionally prepared for. In plain English, the argument is that silver doesn't always move in a polite little staircase. Sometimes it sleeps forever, and then it starts acting like it's trying to make up for lost time all at once. Now, do those charts prove silver has to go to some giant number? No, of course not. A chart is a map, not a legal contract. But I also don't think it's wise to laugh them off because silver has already shown, even in recent history, that when momentum, fear, and scarcity get tangled together, this market can move in a way that looks absurd, right up until it becomes normal. From recent market updates, we've already seen stretches this year where silver was up by well over half from where it began, and that came after a prior period when the metal had already delivered a breathtaking run. So when people say the upside is impossible, I think what they mean is that it feels emotionally impossible. And those are not the same thing. Still, I want to push back on one part of the super bullish crowd, because this matters. I don't think the strongest silver case is, wow, look at this cool line on a chart. I think the stronger case is that the charts are sitting on top of a macro backdrop that keeps getting worse, and silver just happens to be one of the assets most leveraged to that kind of environment. Before we get to the deeper macro piece, let's talk about the market mechanics everybody's been watching. One reason traders are on edge is because silver has not been behaving like some sleepy commodity. You've got unusual action between spot pricing and futures pricing. You've had moments where the front of the market looked very tight. You've had traders watching whether spot starts flirting with futures in a way that makes people whisper about physical pressure. That doesn't automatically mean a breakdown is imminent, and I think some people jump way too fast from strange pricing to catastrophe. But it does tell you this market is not relaxed. And then there's China. That's another piece that keeps showing up in this story. Warehouse stock figures out of Shanghai have moved sharply enough to get attention, and the fact that traders are even obsessing over those numbers tells you something about the mood. People are not looking at silver like it's just jewelry metal anymore. They're looking at it like a strategic material, an industrial input, and a monetary escape hatch all fighting for the same ounces. That combination matters. Silver is weird in the best and worst way. Gold can trade mostly as money. Copper can trade mostly as industry. Silver lives in both neighborhoods, which means it can catch a safe haven bid, an industrial bid, and a speculative bid, while terrifying the shorts. That's why it can look sleepy right before it gets violent. Based on recently published industry numbers, the global silver market has been running repeated supply deficits for years, and stockpiles have already been drawn down in a meaningful way over that stretch. On top of that, industrial demand in Asia has remained firm, especially where electrification and manufacturing still need conductive material. So even if some of the online shortage talk gets exaggerated, the broader supply-demand backdrop is not exactly screaming abundance. At the same time, I want to be fair. More metal in a vault does not automatically kill the bullish case, and tight pricing in the front month does not automatically mean the whole market is about to seize up. Recent vault data for late March actually showed silver holdings ticking higher month over month, which is a reminder that this market is huge, layered, and not always as simple as one viral post makes it sound. That's the counterpoint. Tightness can be real without meaning instant chaos. So I think the right takeaway is this: the physical side deserves attention. China deserves attention. Unusual spread behavior deserves attention. But none of that is the deepest reason silver could go much, much higher. The deeper reason is the same reason gold keeps refusing to die every time people think the move is over. It comes back to the fiscal story, and this is where the phrase fiscal dominance becomes important. It sounds academic. It sounds like something only policy people would care about, but it's actually a very simple idea once you strip the jargon away. It means the debt load and the government financing problem become so big that monetary policy stops being mainly about fine-tuning the economy and starts becoming, whether officials admit it or not, partially about keeping the government finance machine from choking on its own weight. That is the story. Not just inflation, not just charts, not just one war headline. The story is that the system keeps piling obligations on top of obligations, and then it acts surprised when the cost of carrying all that weight starts eating the budget alive. According to the latest publicly available figures, total United States debt is now sitting around $39 trillion. That alone is enough to make people numb, because once the number gets that large, it stops feeling real. But then layer on the deficit, which official budget projections still show running just under $2 trillion this year. Then layer on interest expense, which is now pushed above $1 trillion on those same projections. Then layer on the fact that the government is constantly refinancing old debt while issuing new debt. You see the trap. A recent refunding statement put it in very plain language without trying to sound dramatic. The government is continually rolling huge piles of maturing debt and raising fresh cash at the same time. That is normal in one sense. Governments refinance. But when the absolute size gets this large, and when interest costs keep climbing, the system becomes a lot more sensitive to rate levels, buyer appetite, and market confidence. That's why I keep saying this isn't just a silver story. It's a credibility story. If debt keeps rising faster than political courage, and interest expense keeps rising faster than restraint, then eventually policy gets cornered. Maybe not in one cinematic moment, maybe not with sirens and flashing lights, but gradually, then suddenly, the range of acceptable policy choices gets narrower. And once that happens, hard assets start being looked at differently. Not as cute diversifiers, not as little side bets. They start being viewed as assets outside the promise stack. Think about it like a household, because this is where the whole thing becomes easy to understand. If a family has a mortgage, 2 car payments, credit cards, tuition bills, and rising living costs, there comes a point where they are no longer making decisions based on what is ideal. They are making decisions based on what keeps the lights on this month. That's what a debt-heavy sovereign starts to look like. It doesn't mean collapse tomorrow morning. It means freedom of action shrinks. And here's why silver fits into that story. If policy has to lean easier than it otherwise would, if real rates are pressured over time, if currencies keep being managed through dilution instead of discipline, and if public trust in long-horizon purchasing power keeps fading, silver doesn't need perfection. It just needs enough people to realize that cheap money and hard arithmetic don't live together forever. Now add geopolitics to the mix. Headlines around Iran and the wider Middle East have been jerking oil, the dollar, and metals all over the place. One day the market prices escalation, another day it prices diplomacy. Another day it does both before lunch. That kind of noise can smack silver around in the short run, because silver still trades like a risk asset sometimes. But I think that confuses people. They see a sharp down day and assume the thesis broke. No, sometimes the market is just sneezing. The bigger issue is that geopolitical stress raises the odds of policy mistakes, energy shocks, slower growth, and more financial repression. It also keeps reminding governments and investors that stability is not a permanent setting. In that kind of world, gold usually gets the first safe haven bid. Silver often shows up a little later, but when it does, it tends to show up with attitude. We've also got this interesting split where gold has been attracting central bank-style demand, while silver has had to fight for respect despite its industrial backbone. That's one reason the gold-silver relationship has stayed stretched. But historically, when silver finally starts closing that perception gap, it doesn't do it politely. It does it by forcing everybody who ignored it to care all at once. So where does that leave us near term? I still think the low 70s area matters psychologically for silver. If price starts living below there for a while, people will get nervous. That's normal, but nervous isn't the same as wrong. In a market this volatile, pullbacks are part of the deal. In fact, if silver is ever going to make a run toward those much higher targets people keep talking about, it would almost be strange if it didn't shake people out first. That brings me to the $1,000 talk. Do I think you should anchor on a giant number and mortgage your sanity to it? No. I think that's the wrong way to handle a market like this. But I also think dismissing extreme upside because it sounds crazy is lazy analysis. If the monetary backdrop keeps decaying, if debt service keeps swelling, if deficits stay huge, if trust in fiat management keeps eroding, and if silver remains structurally tight underneath the surface, then what looks crazy now may later look like the phase when people were still underestimating the move. And here's a question for you. Do you think silver's next major move comes because of industrial demand or because people finally start treating it like monetary insurance again? Because I don't think it has to be one or the other. That's the beauty of this setup. Silver can catch fire from more than one direction. If you're successful, share your success story in the comments so others can stay motivated. The main point I want you to leave with is simple. The silver bull case is not one chart. It's not one warehouse number. It's not one spread anomaly. It's not one war headline. It's the intersection of technical pressure, structural demand, fiscal strain, rising debt service, policy constraints, and a market that still doesn't seem fully believed by the crowd right now. That disbelief matters too. Some of the biggest moves happen when an asset keeps climbing while most people are still busy explaining why it shouldn't be climbing. Silver has that feel to it right now. It still gets mocked. It still gets treated like the reckless cousin of gold. And yet the backdrop behind it keeps getting more supportive, not less. So yes, there will be noise. There will be scary red days. There will be moments when people swear it's over. There will be moments when the charts look too hot, the headlines look too chaotic, and the volatility feels like it's trying to throw you out of the trade emotionally. Welcome to silver. That's the price of admission. But if you zoom out, the roadmap is not hard to see. Debt keeps rising. Interest keeps compounding. Policy flexibility keeps shrinking. Monetary credibility keeps getting tested. And silver sits there as one of the few assets that can benefit from fear, scarcity, and loss of confidence together. So, no, I don't think those giant silver targets should be treated as guaranteed. But I also don't think they belong in the fantasy bin anymore. Not with the kind of fiscal pressure building in the background. Not with supply-demand fundamentals this tight. Not with the market still this suspicious of the official story. And not with silver still being small enough to move in a way that shocks nearly everyone when the bid really arrives. Let me know in the comments whether you think silver makes a clean move higher from here, or whether it has to fake everybody out one more time first. Stay sharp, stay patient, and remember, this is for education and discussion only. I'm giving you my read on the landscape, not personal financial advice, so make your own decisions carefully.